Fed holds rates steady. Powell's speech, Trump's tariff moves explained. Today's Federal Reserve meeting has captured the attention of markets and policymakers alike as the Fed chose to keep interest rates unchanged, while Chair Jerome Powell provided crucial insights into the reasoning behind this decision. But here's where it gets controversial. Despite widespread speculation about a potential rate cut in September, Powell made it clear that no such move is guaranteed, igniting debate among economists and investors. Adding a twist to the global economic landscape, the U.S. and South Korea announced a new trade agreement that's shaking up expectations. According to President Trump, the U.S. will impose a 15% tariff on certain Korean imports, while Korean markets will offer duty-free treatment on many American goods. This deal also includes South Korea committing $350 billion to investments that are owned and controlled by U.S. entities, along with an additional $100 billion in energy purchases. This kind of arrangement highlights the complex balancing act between protectionism and economic cooperation in today's geopolitical trade environment. President Trump also took to Truth Social to clarify that American products entering South Korea will not face tariffs, a gesture aimed at promoting U.S. exports. But this raises significant questions. How will these tariffs impact consumers and businesses in both countries? And what does this signal for future international trade policies? Turning back to the Federal Reserve's decision, the central bank kept its benchmark interest rate steady at a range between 4.25% and 4.5%. This pause was largely anticipated, but Powell's comments revealed no clear inclination toward cutting rates in the next meeting come September. He emphasized that future decisions will rely on the totality of the evidence, highlighting the Fed's cautious approach amid mixed economic signals. This announcement sent ripples through financial markets. The Dow Jones Industrial Average dropped approximately 172 points, or 0.4%, during afternoon trading, reflecting investor sensitivity to the Fed's outlook. At the same time, Treasury yields edged higher, responding to the indication that the U.S. economy might not get the relief of lower borrowing costs anytime soon. At a press conference following the rate decision, Powell acknowledged signs of slowing economic growth, but also highlighted the steady performance of the labor market. This dual reality complicates the Fed's policy choices, suggesting that while inflation remains a concern, cutting rates prematurely might risk destabilizing employment gains. Meanwhile, President Trump continued to pressure the Fed to lower interest rates, citing encouraging second-quarter GDP growth data. Inflation, however, was somewhat more persistent than expected, bolstering Treasury yields and strengthening the U.S. dollar. Trump also escalated tariff pressures globally. Brazil faced a steep hike to 50% tariffs, while new duties on copper products caused prices for this key metal to fall sharply. Furthermore, India was targeted with a 25% tariff, linked to its ongoing defense and energy deals with Russia. These measures not only impacted trade flows, but also sent the Indian rupee tumbling against the dollar. In a firm stance, President Trump ruled out extending the upcoming deadline for imposing higher tariffs on countries that have yet to finalize deals, notably including Canada and Mexico. This inflexible approach could provoke tensions with key U.S. trading partners and reshape trade dynamics across North America. On the corporate front, earnings season provided mixed signals. Prominent European exporters such as Porsche and Mercedes cut their forecasts following the EU-US trade agreement, suggesting challenges ahead as global trade shifts. In contrast, major U.S. tech companies, including Meta and Microsoft, part of the so-called Magnificent Seven, delivered strong quarterly results, driving their stock prices upward after market close. By the end of the day, the stock market showed signs of hesitation, with the S&P 500 slipping 0.1% and the Nasdaq Composite gaining a slight 0.1%. Investor focus remained on the implications of GDP data, which lifted Treasury yields. Specifically, the 10-year note yield climbed to 4.377% and boosted the U.S. dollar. On the debt front, the Treasury Department announced plans to increase its debt buybacks while keeping the sizes of note and bond auctions steady. Globally, Hong Kong's Hang Seng Index fell by 1.4%, while most other Asian and European markets experienced smaller fluctuations. And here's the part most people miss. These developments signal not only the challenges central banks face in balancing growth and inflation, but also the growing interconnectedness of global trade policies and geopolitical strategies. Will the Fed's cautious stance on rates hold, or are we on the brink of a more aggressive approach? How will these shifting tariffs affect the global supply chain? And who really benefits or loses in these deals? Share your thoughts. Are these moves the right strategy for America's economic future, or risky gambles that could backfire? Trump's trade deal with South Korea, what you need to know. In a bold announcement, President Donald Trump declared on Wednesday that he has successfully negotiated a trade agreement with South Korea, just ahead of a self-imposed deadline of August 1st. This deadline is critical, as it marks the point when new extensive tariffs on imports are set to take effect. However, Trump expressed skepticism about reaching a similar agreement with India, which is also one of the United States' major trading partners. As the deadline approaches, South Korea was facing a daunting 25% tariff starting Friday, coinciding with an increase in tariff rates affecting numerous countries. Earlier that day, Trump took to his social media platform, Truth Social, to assert that the deadline stands strong and will not be extended. Later in the evening, Trump revised his statement, announcing that South Korean imports would instead incur a 15% tariff. He also revealed that South Korea would invest a substantial $350 billion in the United States, as directed by the White House, along with a commitment to purchase $100 billion worth of American energy. According to federal data, South Korea ranks as the 9th largest trading partner of the United States, while India holds the 12th position. Notably, the U.S. and South Korea already have an existing trade agreement that was negotiated during Trump's first term in office. South Korean President Lee Jae-myung expressed his approval of the deal, which was reached after negotiations commenced just last month when he assumed office. Lee emphasized that despite the tight deadline and challenging circumstances, this agreement would enhance South Korea's competitiveness in the U.S. market. We overcame a major hurdle, Lee stated in a message shared on his Facebook page. Through these negotiations, our government has eliminated uncertainty in the export environment, and by aligning U.S. tariffs with or below those of our major export competitors, we have created a landscape where we can compete on equal or superior terms with other major nations. Lee further explained that the $350 billion investment would facilitate South Korean companies' entry into the U.S. market across vital sectors such as shipbuilding, semiconductors. Following the announcement, the presidential office confirmed that South Korean automobiles would also be subject to a 15% tariff. It is important to note that this announcement represents a framework for an agreement. Finalizing trade deals is a complex process that can take years to complete. However, if the arrangement with South Korea is successfully implemented, the White House will have established new agreements with 11 of the top 15 trading partners of the United States. In contrast, other trade agreements have proven more challenging to finalize. Treasury Secretary Scott Bessent indicated this week that the U.S. and China, the third largest trading partner, have agreed to refrain from retaliatory trade actions and continue negotiations, thereby extending a truce that began in mid-April. A deal with Indian Prime Minister Narendra Modi has been a primary objective for the White House during months of trade discussions. India is known for having one of the most protectionist trade regimes globally. However, it appeared on Wednesday that no agreement would be reached before the impending Friday deadline. Trump highlighted the massive trade deficit with India and the country's purchases of Russian military equipment and energy in his posts on Truth Social, announcing a 25% tariff on Indian imports, along with an unspecified penalty effective Friday. Tariffs are essentially taxes imposed by the government on imported goods, which consumers often end up paying through increased prices. While the rollout of these tariffs has introduced uncertainty into the economy, recent data indicated that businesses and consumers have largely managed to absorb the impact thus far. Additionally, the Federal Reserve opted to keep interest rates unchanged on Wednesday, expressing concerns that trade policies could contribute to inflation. On April 2nd, Trump announced a sweeping array of tariffs during an event he labeled Liberation Day, which would have raised the effective tariff rate to 28%, according to the Yale Budget Lab. At the beginning of Trump's second term, the national tariff rate was between 2 and 3%. This announcement sent shockwaves through global markets, prompting Trump to quickly retract the implementation date for the tariffs by 3 months to allow for further negotiations with foreign leaders. I was trying to explain to people who panicked on April 2nd that we are working on peace deals, trade deals, and tax deals, and they are all coming together, Bessent remarked at a recent event hosted by the conservative news outlet Breitbart. For a while, it seemed like the U.S. was isolated from the rest of the world. He added, "Now that we have secured agreements with our top trading partners, we possess significantly more leverage." Trump has utilized not only access to American markets, but also security assistance as leverage in trade discussions. European nations and South Korea are keen to maintain the presence of U.S. military personnel in their territories. Trump has contemplated relocating tens of thousands of troops from both regions, according to recent reports. He has also employed the threat of additional tariffs to advocate for peace agreements between Thailand and Cambodia, as well as between India and Pakistan, independent of tariff negotiations with those nations. The U.S. economy demonstrated a robust growth rate of 3% in the second quarter, although analysts caution that trade-related anomalies may be artificially inflating this perception of strength. Consumer spending growth has recently decelerated, and companies are increasingly scaling back hiring plans as they await clearer guidance. Overall, the gross domestic product, GDP, the broadest measure of goods and services produced in the United States, grew at a rate of 1.25% from January to June, marking a significant slowdown from the 2.3% growth rate observed a year prior. Nevertheless, the Trump administration was quick to celebrate the latest growth figures, asserting that its policies are ushering in a new golden age for the economy, while also criticizing the Federal Reserve for not yet lowering interest rates. Americans have faith in President Trump's America First economic agenda, which continues to prove the so-called experts wrong, stated White House spokeswoman Caroline Leavitt in a Wednesday announcement. As the deadline approaches, various sectors of the economy are preparing for the impending increase in tariff rates. The U.S. Postal Service issued advisories to consumers on Wednesday, providing guidance on compliance with de minimis tariffs, which are levies on low-value goods that were previously exempt from trade barriers. Additionally, the White House issued executive orders on Wednesday to formalize new tariffs on copper imports and goods from Brazil, which Trump has criticized for prosecuting its former president, Jair Bolsonaro. American and Indian negotiators had recently expressed optimism that a breakthrough was imminent regarding what was intended to be the first phase of a larger landmark agreement. The United States is India's largest trading partner, accounting for nearly 20% of its exports and generating a $46 billion trade surplus in 2024. However, that optimism dissipated following Trump's early morning posts. The imposition of higher tariffs poses a significant threat to India's growth aspirations, particularly in sectors heavily reliant on U.S. exports, such as pharmaceuticals and smartphones. Many economists anticipate that the new tariffs will be layered on top of a 10% levy targeting the so-called BRICS nations, which include Brazil, India, Russia, China, South Africa, and others. Central to the trade discussions with the United States is the dairy industry, which is highly protected in India. New Delhi opposes dairy imports from cows fed with animal-derived products, a common practice in U.S. agriculture. Local media often refer to such imports as non-veg milk. Washington has also urged India to ease restrictions on genetically modified crops, particularly corn and soybeans. Trump's April tariff announcement reignited a long-standing debate in India regarding whether the country. Many economists argue that this moment presents a rare, politically viable opportunity to implement necessary reforms. However, others caution that India's labor-intensive small and medium-sized enterprises, which may struggle to compete on a global scale, could be adversely affected by such changes. In 2023, India's average tariff was reported at 17%, nearly 6 times higher than the average U.S. rate, according to the World Trade Organization. Trump has consistently highlighted India's tariffs in his speeches and press conferences, including during a joint appearance with Modi in February. While some countries retaliated against Trump's April tariffs, India took proactive steps early on by reducing tariffs on certain cars, motorcycles, electronics, solar components, chemicals, and alcohol. It also proposed eliminating what is known as the Google tax on online advertisements. However, relations have since soured, particularly following a flare-up between India and Pakistan, which Trump has claimed to have helped de-escalate through trade pressure. India has issued measured denials of these claims, while analysts have pointed out what they perceive as a shift in U.S. policy favoring Pakistan, revealing the limitations of the ideological alignment between Modi and Trump. India's Commerce Ministry stated on Wednesday that we remain committed to achieving a fair, balanced, and mutually beneficial bilateral trade agreement. In contrast, opposition politicians in India criticized Modi in light of Trump's announcement, with the Indian National Congress Party, the main opposition, declaring on social media that India's foreign policy has completely failed. Additionally, Trump mentioned on Wednesday that he had reached an agreement with Pakistan regarding oil, although he did not provide further details. Trump escalates trade war. 25% tariff Russia penalty on India. In a bold move that could reshape international trade dynamics, President Donald Trump is intensifying his stance against India, raising serious doubts about the future of trade negotiations with this crucial partner just days ahead of a looming tariff deadline. In a couple of recent posts on social media, Trump sharply criticized India's trade restrictions and highlighted the country's ongoing dependence on Russian oil and military supplies. He reiterated his threat to impose a hefty 25% tariff on all imports from India, along with an additional penalty related to India's energy transactions. Trump stated, "While India is considered a friend, our business dealings have been minimal over the years due to their excessively high tariffs, which rank among the highest globally, and their numerous non-monetary trade barriers that are quite burdensome. Furthermore, India has consistently sourced a significant portion of its military equipment from Russia and is one of the largest consumers of Russian energy, alongside China, at a time when the global community is urging Russia to cease its violent actions in Ukraine, a situation that is far from ideal." This escalation in tariffs comes on the heels of recent agreements with other major trading partners, which have established a tariff baseline of around 15 to 20%, along with commitments to enhance market access for American goods and foreign investments. For India, this represents a significant setback in a prolonged effort to finalize a trade agreement that officials had believed was close to completion. High-ranking trade representatives have been shuttling between Washington and New Delhi for months, striving to reach a conclusive deal. However, the recent trade agreements with Japan and the European Union have given Trump a renewed sense of confidence as the August 1st deadline approaches for the reinstatement of previously paused reciprocal tariffs. According to officials, Trump's focus on securing commitments for market access for U.S. producers has become a critical point of contention as he reviews draft proposals. This has created a substantial hurdle in the negotiations with India. As one official noted, they are willing to compromise to some extent, but the president is not in a mood for half measures. He demands the removal of barriers entirely, or as close to that as possible. Trump's strategy appears to be increasingly clear to foreign trade officials involved in these late-stage discussions. He is prepared to let these elevated tariffs take effect, a stance he has consistently communicated in public over the past few weeks. This has fostered an environment where Trump wields considerable leverage over trading partners, even those who are traditionally allies, who are eager to retain access to the largest consumer market in the world. Kevin Hassett, the director of the National Economic Council, expressed at the White House, "I believe President Trump is feeling frustrated with the progress made with India. But he believes that a 25% tariff will effectively address the situation in a manner beneficial to the American populace." He further suggested that these tariffs might prompt India to reconsider its trade practices. "In the long run, I anticipate that Indian companies will begin relocating production to the U.S., and there may be a greater willingness from India to open its markets to us, leading to a reevaluation of our future trade relations," Hassett added. Simultaneously, Trump has escalated his threats to impose secondary sanctions on Russian energy exports in response to Russian President Vladimir Putin's refusal to de-escalate military actions in Ukraine. This situation is particularly significant for India and China, as they are among the largest purchasers of Russian energy products. India's oil imports from Russia have increased this year, with Russia remaining the top supplier to the world's most populous nation, accounting for approximately 35% of India's total oil supplies, followed by Iraq, Saudi Arabia, and the United Arab Emirates. CNN has reached out to the White House for further clarification regarding the nature of the impending penalty and whether India will receive an official notification regarding the tariff, similar to what other nations have received. On Tuesday, Trump informed reporters that India would incur a 25% tariff if a deal is not reached by August 1st. Earlier this month, he set a 50-day deadline for Russia to agree to a ceasefire, warning that countries purchasing Russian oil would face secondary sanctions. This ceasefire deadline has since been extended to August 8th. Trump's administration has been clear in private discussions with counterparts that the threat to significantly enhance an already extensive U.S. sanctions regime on Russia is serious and not merely a negotiating tactic. Treasury Secretary Scott Bessent conveyed this message directly to his Chinese counterparts during trade discussions in Stockholm, stating, "Anyone who buys sanctioned Russian oil should be prepared for this." An analysis conducted by the Center for Research on Energy and Clean Air in June revealed that India remains the second largest buyer of Russian fossil fuels, following China.